Brian Wang has decided to join us yet again. And boy, do
Mhm.
we need him today because we've got so much going on. Brian, Alex Potter says, he's from Piper Sandler, for those who don't know. He says Tesla looks like the sole winner in the auto industry disruption. He can't see any other auto companies that will even be able to participate. This is
Right.
I'm paraphrasing. That wasn't exactly what he said, but I think it's
Mhm.
a fair paraphrase. He
Yeah.
put down the list of Ford and General Motors and Stellantis and others and said he just doesn't see anybody else that's going to be able to play. And he more or less, I think, was talking about what I've been talking about, which is the disruption is not the uh, ICE versus BEV. The disruption is autonomous, and Elon is going to, or Tesla is just going to walk away with this autonomous thing. We've been watching for 4 days now. What do you think?
Yeah. I agree that in terms of scaling autonomy, that if Tesla has it, the others have no hope because everyone else has been pursuing LiDAR-based systems primarily. And LiDAR does not scale. The production of LiDAR is not there. So even if you had solved it, the production of new LiDAR factories, that's why there's only a few thousand LiDAR-based RoboTaxi is that the chicken egg thing. It's not working well enough for the companies and the business model, other things aren't there for them to say, okay, yes, we want to order 100,000, a million of the RoboTaxi grade LiDAR. And so the orders aren't there, so then suppliers can't build it. If that's your key component. Then if you never get there, then you can't scale it. So at this point, Waymo still having errors. We saw them, causing a fender bender, blocking intersection. They still haven't fully solved it. And the, I think Bank of America or Wells Fargo was saying, okay, if things go great, then these LiDAR-based guys, Waymo they'll have a rapid expansion to 18,000 vehicles by 2030, right? Which is meaningless relative to millions of vehicles. So
Right. All right. So, do you know, by the way, I was thinking about this before we came on the air. Do you know if either Google or anyone else is using end-to-end um, uh, uh, training like Tesla is? Or
I know that I think some of the Chinese players have switched over. If I'm not mistaken, XPeng switched over. So several of them dropped LiDAR, went to camera only, went to end to end.
okay,
But it's like a year ago, 2 years ago that they made the switch. So
okay,
those players do not have the number of cars, the data volume that Tesla had. Because besides saying, okay, I'm going to go end to end, my researchers are going to do this thing, right? I will install, like Tesla and Elon did, every vehicle will have the camera and the chip, right? Every vehicle will have the camera and the chip.
right.
And um, I don't think that's happened. I think BYD for a long time saying all that autonomy stuff is total garbage, not going to do it at all, not even a driver assist system. They suddenly got religion and now they put LiDAR-based systems in all the vehicles, but it's two tiers. The $20,000 under vehicles with a driver assist, and then the premium vehicles, $30,000 and up, with a more advanced LiDAR system. But they started from nothing to getting religion in a year, and they had the potential volume, but they only got this going a year ago. And how much can you compress getting the data, getting all the million vehicles out there? So no one has millions of vehicles. I think some guys with 100,000 vehicles a year, they are trying to do what Tesla did. But the same thing is a bunch of Chinese startups in space saying, I'm going to make a Falcon 9. So they've been working on Falcon 9 for 5, 6 years, and they have not landed one successfully, right? They've gone up and done a launch, but they have not. I think they've done the hop where they went up like 100 meters and then came down, or went up, so they haven't done up to orbit. Yeah.
Right. Yep.
So,
True, true.
mhm.
Yep, yep. So Omar, I thought it was kind of fun. Omar posted a long list of comments from early Waymo users. So this is
Mhm.
going back like 14, 15 years ago when they first started out. or
Yeah.
10 years, whatever it was. I can't remember now. However long it's been since Waymo started. But they, they had their comments, just like Tesla has now. They had the comments. And so people were putting their complaints about the vehicle going around in circles, getting lost, going the complete wrong way, hard
Mhm.
stops where the stop was so hard that the seatbelt bit into their shoulder, letting the passenger off 10 minutes from the destination, and
Yeah.
on and on and on. So
Yeah.
when you look at those kind of comments from the beginning of Waymo, it kind of makes, by comparison, it makes the RoboTaxi rollout of the last 4 days seem like, boy, it's pretty good with the kinds of issues that it's been running into being much more minor than those issues.
So, when you compare not just to, way early at the beginning, even only like I think maybe 6 years ago, that's when they removed the safety driver,
Oh, yeah.
right? So they had safety driver in there. So not just safety passenger monitor,
Right.
but actual like I'm driving the same thing that Tesla's been doing with customers, where
Right.
you buy FSD and you must be attentive and all that kind of stuff. So that phase for them, for Waymo, was 6, 7 years ago, and then they went to heavy remote driving,
Right.
right? So they got out, and then supposedly 2 or 3 years ago, they went to the system mostly doing it by itself, supposedly not doing much remote driving, right? But if they were, they're only in the United States. Any of the copycats, Apollo Go, Pony AI, that are in China, they must have remote driving still, because
Right.
the China law is you must have remote driving, right? Whether they use it or not, that I think goes with the question of like how much are they using it. We don't know, although I've seen a video of a tester who went over there and 6 months to a year ago was scared crapless, by the vehicle and how it's behaving. Although supposedly went back a couple months later and things are working better. But then how much is that software improvement versus remote driving, right?
Right.
Like if I'm controlling it completely, like I'm driving a video game, in a remote station, how much is that? So that goes to all these prediction of the things that we don't know what's going on in the back end. Like a lawsuit for Cruise, and then Cruise went completely out of business in January. But before that, 2 years ago, they had a accident where they hit someone, the person underneath the car, and then I'm gonna pull over so it's safer, and they dragged the person 20 feet, right? And then the lawsuits came, and then they revealed, oh, we have two remote drivers for every one vehicle that we have, right? So, but they didn't reveal that. They weren't saying that, hey, I'm proudly announcing that I'm doing this and I'm fully transparent. We're using a bunch of remote drivers. Only in the lawsuit did they reveal, oh, yeah, we had a lot of remote drivers. Waymo, we don't know. The thing is, you're at 1,000 vehicles. You've been there for 10 years. They have 500, slowly getting up to 1,000. So you expand from one city with 400 vehicles to, you know, 4 or 5 cities with 1,000 or 1,200, right? Is that I don't think they've been upfront with how much they have. They are from with they at least have phone a friend, where it gets confused because we see it get stuck in intersections. I know what to do. Then the vehicle calls out and says, "Okay, I don't have a safety thing. I don't know when. I know to brake to avoid something my lidar is saying in front of me, but I'm in this intersection and I'm stuck. I don't know what to do." And then it'll say, "Okay, now do something." Right? So it's the nature of the errors that they have.
Yeah, and we've been talking a lot, about the kinds of errors that we humans make.
Mhm.
We'll miss the off ramp because we're distracted, or we'll start to make a lane change and realize there's somebody that we didn't see in our side view mirror. There's you're distracted by your phone or by your kid in the back seat, and you don't see the guy stopping in front of you. I mean, we make these kind. You run a stop sign because a tree branch is in the way or whatever. I mean, we make these mistakes every single day. But then you start talking about cabs, because basically we're now trying to compare with a cab of some kind, and we're talking about Waymos and the mistakes they've been making. But you and I were having a long conversation yesterday about some of the drivers we've been with in taxi cabs or in
Right,
Ubers. And
right.
I was talking about this guy in Venice, Italy. that in the rain was getting upset because the traffic was all stopped in front of him. So he got his one tire up on the center divider, which was
Hmm.
a raised center divider,
Yeah.
and one wheel, two wheels up on the center divider, and the other two wheels still in the traffic, passing cars as he was going. I mean, this is you had your examples as well, but I remembered an Uber ride I had in New York City
Hmm.
last year,
Yeah.
where the Uber driver couldn't find the hotel
Yeah.
and was just driving around all over the place because he couldn't make the right turn that he needed to, I thought he needed to make, and then was now trying to find with the one-way streets and everything else how he could get to the hotel and went, several blocks out of his way in order to accomplish that. So these are normal kinds of things, and we're expecting somehow that the autonomous vehicle using existing mapping
Hmm.
will somehow do better than Uber, do better than humans, do better than Waymo. And so far, quite frankly, I think there's a case that could be made that it's doing pretty darn good.
Right. So California is very good publishing their statistics, and there's a lot of companies, 20 some companies, 20, over 20 companies that test their vehicles um, in the San Francisco and California, LA area, right? But they do a lot of reporting to the California highway and stuff like that. So based on the latest reports, current up to November 2024. So they publish annual reports. Last one published data up to November 2024. And the miles between reported disengagements for Waymo in that report was about 7,000, 9,000 miles. Zoox and some of the others have better. But Cruise for a while had a better, miles for disengagement. So that isn't really, the best thing to say about safety. There's also like about 700 actual accidents reported for
Yeah,
Waymos over the many years,
right.
right? So then you have to dig into the details in order to discern what is the safety, what is not
Mm.
the safety. But just based on the disengagement type thing, if Tesla now over 4 days has done about 4,000 rides, 1,000 rides per day,
Mhm.
right? Then that would be about 20,000 miles worth of driving.
Mhm.
And we've had two known instances where the safety monitor had to do something, two known instances where there wasn't intervention. Because really only the safety monitor can intervene.
Right,
Like the passenger can have a pullover, but they've only, all the videos that we've seen, they only had a pullover to say, end my ride early. And
right,
that end the ride early thing is not perfected. It works sometimes, doesn't work, others not work perfectly. It still stops and stuff. Anyway, so the two incidences were Dave Lee, um, his ride was great. The vehicle was pulling up to a parking spot, but there was a UPS truck in front of the parking spot, and it started to back up just as the Tesla was pulling up even to the car beside which there is an open space on the side. And then the safety monitor quickly hit stop in lane once he saw that the UPS guy was not being attentive and just straight backing up quickly. And so they avoided what could have been a fender bender from inattentive driver. So that was considered a critical disengagement because even though not critical like avoiding a fatality, critical avoiding what could have been a possible accident, a possible safety situation. And even with a minor safety because of very low speed. The other one was safety monitor for Farzad hit his button to say, okay, you're going to turn into a gated community. We don't want to do that. So go pull over to the side of the road. He then hit the port button as well. So all three buttons that Safe Monitor has were activated now over two situations. And they changed the navigation to avoid the gated community, which I'm sure now they can say, okay, gated communities have that to only if we're going to go to a point within the gated community do we
Mhm.
go
Mhm.
through that. So I'm sure they made that adjustment pretty quickly. So.
All right. So after 4 days, almost 4 days now of activity, and of course, we'll just continue on for the next couple of weeks, and we'll see when they take out the safety rider. We'll see when they take out when they decide to expand the territory, et cetera. I mean, all these things will be happening if they have to, add more vehicles and whatnot. But what it comes down to at this point, in my view, and it's always been this for months, it's been this, but now after a few days of watching, it's even more so. It either works or it doesn't. And to
Mhm.
me, it looks like it works good enough. And it's
Mhm.
just going to get better. This is the
Right.
worst it's ever going to be. It's just going to get better and better and better.
Right.
So as it gets better and as they expand the territory, this comes back to Potter's statement up above. Who else? Nobody else has a shot at the numbers, and the numbers are very clear in terms of the capacity to build new vehicles. 3 million a year, let's say, is the capacity. They can
Yeah.
all go into service if Tesla decided to do that. They can all
Right.
become fleet. Moreover, they've got 8 or 9 million vehicles out there, many of almost all of which are potentially able to be turned into cabs. So there's nothing like that out there. So as much as I've been touting my, all-time high by July 7th, the truth of the matter is it's just a matter of when. It is a matter of if.
I agree. I agree that once um, you hit some critical curves, like if this year we get to 10,000, 20,000 vehicles, we're clearly 5 times, 10 times bigger than not just Waymo, but every other RoboTaxi company. And we're doing real RoboTaxi business, say expanded, fully fill up Austin. They have permission from Texas to go to all the other Texas cities because it's a statewide approval. They can go to um, 30 times the population of Austin by going filling up Texas. And then they have permissions in California. And then that would be Texas, California be 20% of the United States, right? So at that level, if you fill it up because you're confident in it, say as much as 50,000 vehicles, right? Because it'd be 20 times the population of that of Austin, then um, that would be significant revenue. That would be billions in revenue that they would have from that level of fill. And then next year they would then have. And I expect to actually, that may take to end of Q1 before they fill up both states,
Right.
in a significant way. But then you can say, okay, now we're ready to go, and then a 3 month pay period where they open it up to the entire network of 3 million Tesla vehicles in the United States and North America, and then elsewhere.
Yeah. So I mentioned this last night to Nicholas, and I'll just mention it to you as well. I think you and I might have talked about it off air, but my concern at this point has nothing to do with the technology. I think the technology is done. I think
Yes.
we've seen enough.
Mhm.
Some people know, there's still skepticism out there, and there's going to be skeptical voices for the next few weeks until this thing is really, been out there for a while. Um, the skepticism I would have, quite frankly, is will there be enough riders?
Mhm.
Okay, so how do we get enough riders? Now, the most obvious set of customers would be
Mhm.
stealing away customers from Uber, from taxi cabs, from Lyft, and from Waymo. So that's the most obvious group, and there's lots of them. That's a very, very large group out there. But
Mhm.
there's always the awareness issue. How do we make those people aware that there's an alternative? How do we get those people switched? Now, I will say that there's a lot of Uber drivers who own Teslas, and if Tesla opens it up, at least to the cab driver, the Uber drivers, and says, "Okay, Uber drivers, you can put your car out as a
Mhm.
Airbnb."
Mhm.
That's a pretty nice switch right there. There'd be a big bunch of folks that would switch at that point. But then beyond that, you need to have a way to get the word out. And as much as word of mouth is great, and Waymo has built theirs on word of mouth, but okay, they've built to only like 1,500 vehicles at the most,
Right.
100 maybe.
Right. Mhm.
Uber's got a few million, I guess, at this point. Is that right? A few million? Couple million?
Right. Yeah, yeah, yeah. The Uber has across the world,
Yes.
I think 6 million drivers.
6 million drivers. Okay.
Yeah, so they probably have like 2 million in North America.
Right. So, and they've done a lot of that by word of mouth as well. And
Mhm.
we've got, of course, Elon has a big voice because of
Mhm.
X. He can, put out some kind of a promotion or something through X. Do you think, though, that there's going to need to be something like advertising or something like a promotion or something more than just, okay, we'll let it organically grow in order to have 1 million or 1.5 million vehicles on the road in the next 18 months?
So Waymo, in the um, f- few cities that they operate, admittedly the most tech-forward
Yes.
cities and locations ever, they are at about 30% of the rideshare market, right? And they're doing that with charging more money than
Yeah.
Uber and Lyft. Um, so I think the various surveys have taught, so getting to 20, 30% of the rideshare market, um, that is still a few billion dollars of activity because Uber does about, I think, $40 billion in that range of revenue, maybe 80 billion or something like that of revenue, although
Right.
that's their total charges. And then you
Right.
take down based on, how much small profit there is. So if, just based on that calculation, saying, okay, only can penetrate as much as Waymo, even though we're going to charge less, right? Then we get to 30%, right? So then you say, okay, well, we're going to allow the fact that there's some financial incentive, people will switch over, and then get to 50%. And that would align with some surveys saying that in general, about half the people are willing to try it. But then to your point, in terms of the marketing or in terms of give it a try, the free trial for a little bit of time, then um, then we can get more people to try. Because if half the people who do rideshare, which would be, I don't know, like 20 million rides, it'd be a large number. One, it'd be a few billion already. You hit that level. You could certainly do blow out Uber Eats, take 100% of that, because that's all price sensitive, right?
Right.
So, and you're not riding it, your food's riding, or your other goods are being delivered for that kind of stuff. So the delivery of goods, which for Uber, I think it is close to the money of moving people, right?
Wow.
So you could get 20, 30% of it for to 50%, to at the first penetration level. And then you can get all of the goods delivery thing and you can expand the goods delivery thing because that's all price sensitive. And then when you put that into trucks for the semi trucks and those kind of things, and again, that's all price
Right.
sensitive. There's nothing there in terms of the preference thing. So those would still be very large levels. That would involve the majority of the fleet to do it. And then you go from that base to the marketing. But the marketing thing would be seeing, just like Uber is saying, okay, try Uber, but it's not like people don't know about Uber because it's so active. Tesla will be at that level of activity as well. And then it's a question of like, a friend tried it, you would know people. It would be, yeah.
Okay. So let's go to the stock in general. People are saying that lots of people are saying, although I'm not sure everybody's saying, but lots of people are saying that Tesla is now past the point of counting cars because
Mm.
everybody's just concentrating on the AI aspects, whether that's RoboTaxi or Optimus. But I kind of felt like maybe today's sell-off, which kind of took everybody by surprise, that today's sell-off might have had something to do with the okay numbers from China yesterday and the not so okay numbers from Europe today. What are your thoughts?
Um, I still care about the numbers of cars produced. I want them to make the low price vehicle. I want them to execute on everything. Just because they're coming out with the one transformative thing, which is a huge transformative aspect, and it's going to all be about AI in 2026. I want execution on everything. And part of it is executing on making the vehicles, right? And so you have 120,000 people in the company. You only have, I saw the pictures of the AI team. There's not that many people.
Right.
So everyone else doesn't get to slack off. I want them making more vehicles. So I want to see, the true 3-row Model Y. I want to see the compact Model Y. I want to see all those vehicles out there. And then the Cybercab out soon. So
Yeah. Okay. Okay. All right. Well, so you're agreeing with me that maybe the numbers next Tuesday, Wednesday, next Wednesday on the
yeah.
2nd might be more important than people are are thinking, and that and now maybe the anticipation is getting to be that they're going to be awful, so maybe it's getting baked in. But in any case,
It's
it's
not a
going to
life or death, up 30%, down 30,
right.
30% kind of thing. Although, if it's really, really, really fantastic versus really, really bad,
Yeah,
then it could be there. But then the, if you have two curves or something like that, like one's this slow and steady thing with the volume thing, and this other thing is coming up quickly, um, it's
yeah,
they'll go back to the main course. It's like, okay, I really love, the chocolate bar, or that chocolate bar had a bad taste to it. It's okay, fine, but the main course is what's going to matter. And ultimately being within 2, 3 weeks,
right,
right? It
right.
could be a damper because, well, you know,
Well, then of course, we have the earnings call where we would assume there will be lots and lots of conversation about RoboTaxi and also this. So CEO Jensen Huang said that other than artificial intelligence, robotics represents the chip makers, meaning, NVIDIA's biggest market for potential growth, and that self-driving cars will be the first major commercial application for the technology. So once again, Jensen Huang has come out and basically said we should all be buying Tesla stock.
right, right.
So, and then Elon Musk came out and he said that version 3 of Optimus is unbelievable. I didn't say that. I think what he said, amazing. And that Grok is already integrated into Optimus right now. So those
Mhm.
were two pieces of information that didn't seem to impact the stock at all.
Right.
Should people be starting to, well, we all know that there's, some part of the price of Tesla right now is Optimus. There's no way
Mhm.
you're going to sell for 140 or 150 times earnings if you're not thinking about the future products. But the uh, Jensen Huang and Musk give really, really bullish comments about robotics, and doesn't impact the stock at all.
Right, because I think we saw the 10% move when the robotaxis finally came out. So clearly there's a lot of show me, just the promise is insufficient, that they have to have a show me. So, that being said, as you're also saying correctly, is that there is, a level of um, the story stock there, right?
Right.
So that is a chunk of it, but it's not to the level like, well, the analysis has been by Cern Basher, where it's like, okay, let's rewind something and see, what was the stock price, whatever, and then within 5 years, Model 3 and Model Y are ramped up, and then go back 5 years. What was the discounted cash flow? What did you predict? It? Practically nothing,
Right. Right.
right? So it's the same thing. Like this thing had the potential to 10x, 20x the revenues and the profits of the company. If we do any kind of discounted cash flow, we should be trading at 5 times our current level, right? But we're
Yes.
not. So whatever anticipation there is super discounted, which the some of the fund managers, like there's the fund manager from Montreal who's on Herbert's channel a lot, right? Who say, they give a percentage chance,
Right.
1%, 5%,
Right.
right? So it's that level of how much it's only because this opportunity is so big
Yes.
that their 1%, 5% actually is a significant amount of the share price. But it's one like RoboTaxi, now that we have 20 out, we've gone from zero to 120. And in fact, it's, doing pretty well the first 4 days. That should materially tick up your percentage. So if you had a model that says, okay, Kathy Wood is at 90% that's going to happen, right? And so she's at $3,000, right? So then if we only moved up $40, then
Right.
you went from 3% to 8%, if you, or 3% to 5%, if you have 100% as full Kathy Wood,
Right.
right?
Right.
So either you don't have full Kathy Wood because, well, we know there's some guys that publish their thing like I think the Bank of America guy or something like that, who says he fully believes in it, but it's 2040, right?
Oh, I
So
got
that
it. Okay.
he's still shoving it out to say, I believe this thing, and it will be 2040.
I see.
Or you have Gary Black saying, I believe this thing, but margins do not increase because everyone else will have it.
Yeah, right.
Somehow magically,
Right.
I must give these technology vehicles to everyone else, and then they can somehow ramp their factories instantly when it takes us 4 years or something. Yeah.
I've been trying to figure out why there will be any lag on the profitability.
Mhm.
So if I'm Waymo or if I'm Uber, these companies where you've got employees, you've got apparently a high cost of acquisition. You've got to organize it so that there's the flow of traffic, et cetera. I mean, you've got all these. You've got not only do you have these not employee, they are of course not employees, but you have these drivers, but they have to be vetted. There's an expense of having them come in and vetting them, and then some of them don't. After you've spent all that money, they don't do anything. I'm trying to figure out why on day one, the Tesla vehicle, if the ultimate number is 20 cents a mile, which Kathy and Elon seem to agree on, I've
Mhm.
got a number closer to 25 cents, but okay, who's quibbling? Why in January, let's say, of next year, it won't be 25 cents a mile cost?
Um, I think the full 25 cents a mile assumes mainly Cybercab, which would be a $25,000 vehicle.
Add 5 cents or 10 cents, even 10 cents. It's not 10 cents, it's 5 cents.
Yeah,
Add
right,
5 cents for a Model Y. Okay, so
right.
now you're at 30 cents. But what other kinds of, I mean, yes, there could be a cost of acquisition. We just
Mhm.
talked about that.
Yeah.
But I'm trying to figure out what the cost is going to be that's going to dramatically make that number be over 30 cents a mile from day one. And you're going to be able to charge 215, 250, something like that, average for at least the first year or so.
I think it's a matter of scale that if your endpoint to get to say 1 million vehicles or whatever is at that 30 cent 40 cent thing even with some other stuff, that if you're only at 10,000 vehicles, then well, one, your margin has to get over the fact you're spending $1 to $2 billion a year um, doing things. So at an autopilot like that, you have to get over your fixed costs before it's really flowing
So you're
through.
thinking
So
you're thinking in terms of the amount of expense associated with the data center
yeah,
and the training and all that, but that's
right,
being partially offset by FSD.
right. It's being partially offset by FSD. So it would. So let's say it, in the it's not 20 cents, it's 40 cents, right?
Okay.
So instead of and you're charging $2,
Yeah.
So then instead of 90% margin, you're 80% margin, right?
Exactly.
So the margin is wonderful,
From the
right?
get-go.
From the get-go, right? You must break it out. This goes to something I've said like a
Yeah.
year, 2 years,
Yeah. Yeah.
whatever, is that they need to have slides in the quarterly thing. Here we're doing quarterly earnings, and look, 5 slides saying
Right.
it is 40 cents.
Yeah.
What Randy said is correct. It's 40 cents or it's at 30 cents. We're giving you that number
Right.
and we're saying here's how much we're charging, and
Right.
then here's the margin on it, and then here's the fixed cost.
Right.
So we give you the entire, here's everything about the business model, here's how it's functioning, and here's how our $1 billion looks this quarter. And then next quarter it's gonna be 2 billion, the quarter after it's gonna be 4, 8, and they can be projecting out in 7 quarters to be 10 billion, right? Now, Gary Black and the other guys can pop it into a spreadsheet and say, yes, I see it now.
Yeah.
You have led me to this thing, and I have been able to
Yes. Yes.
parse it out that here's what is all happening.
Yes.
Everything that CERN Basher has already been telling us for 2 years that I've been ignoring, I now see because you are now telling me this. Then there'll be your Gordon Johnson who say, that's all fraud. I don't believe it. But
Right. Right.
the 80% majority will say, okay, here is the numbers, 100% what you just told me on the call. And they'll ask something in the call about whatever. So that's when Wall Street fully prices it in. right?
Yeah. Okay. That's what I've been thinking about these things, and I'm glad I've got you to help me think them through. So let's help me think this one through too. So we'll switch to the general economy.
Mhm.
Trump is obviously way smarter than anybody thought he was. This has been proven, I guess, every single day for 105 days. Besant, everybody agreed he was smart, and he's just been proving it over and over again how smart he is. But as smart as both of those two guys are, they are playing with fire a little bit. So let me set this up. They are disrupting international trade. They're disrupting domestic manufacturing. They're disrupting immigration. And they're disrupting the federal government and the tax system with the big, beautiful bill. And they're doing all five of those things simultaneously. So if you've got a big soup in your chemistry lab and you're putting in all these chemicals and you don't really know 100% what any one of them will do, you kind of have a general idea of the direction and you're not putting any, something that's going to create a bomb. You're 100% sure of that, but you might be putting something in that would cause a firecracker. There's some possibilities that we could have some surprises coming along in the next few months. And you think?
That they did not have a choice as to how they did it. If they went slower, we're already having things slowed down by the activist judges, right?
Right.
So if you try to go slower, then it would be easier for judges, for protesters, whatever, to interfere, right? So you have to go at this pace to even have an attempt to make it work. Um, there is the problems that, putting it all together makes it difficult. But trying everything and being, you know, failing by doing versus failing by not trying.
Right. So, for instance, I talked about this last night on the show, but many people probably didn't hear it. And I'd like to get your view on it anyway. So, I put into Manmus, I think that's what it's called. Anyway, this program that Larry told me about, I put into it's an LLM with agents. It has agents,
Manus, yeah.
Manus. I put in there about how home sales and apartment rents would be impacted by the fact that there's not 2 million immigrants coming in every year. And now there's a million immigrants going home every year. So you got a 3 million difference. And you're talking about something on the order of 700,000 to 1 million households fewer being formed.
Right.
So, under the Biden administration, you would have had, you know, what would that be? 3 million, 2 million. You would have had divided by three. Let's say you would have had 1.6 million. I'm sorry, you would have had. I don't know what I just said. Anyway,
Yeah.
the result is a lot fewer households being formed. So
Right.
unless apartments builders slow down in building apartments, our home builders slow down in building homes, all of a
Mhm.
sudden you're going to start seeing reductions in rents and reductions in home prices. And in fact, that's what we got yesterday and today. We're
Mhm.
seeing home sales slowing down. We're seeing home prices coming down, and we saw new homes and also existing home prices, especially in Texas and Florida, which would be major immigration locations.
Mhm.
So this could interrupt or interfere with that whole industry, which is about 1/3 of our economy. What do you think?
I would say that it wouldn't impact home sales um, that directly. I think that the um, all the other parts to it, like you said, five other things, right? Like
Yeah.
interest rates, tariffs, all the other things, the job market, all that kind of stuff, right? So I would say that um, there's a lot of moving parts there. By eliminating the a lot of the immigrants, like millions of immigrants, is that increasing the real wages of the people who are still here,
Mhm.
right? Because then they can afford more,
Right.
right? So what level? And it's like if the poorer immigrants, in theory, the poorer immigrants are that they don't have the money to buy houses. These households would only be in the rental market.
Right.
So then it would just be rental supply and demand that'd
Mhm.
be impacted, which then, does translate down into housing, right? Um, but then also decision to build or not build a particular complex wouldn't necessarily be that tied to that if these other five things in motion around tariffs and other things. Because if oil prices come down, interest rates come down, that other activity would swamp the fact that some low-level wages thing was affecting rents, right?
Yeah. So,
Because
so you're saying you're agreeing with me that the soup is a little hard to predict, that if your real wages are going up
yeah,
and mortgage rates are coming down, that would be an impact on the opposite side of this of the situation, encouraging people to buy
right.
and pay more. Yeah.
Right. And a bunch of these predictions that people have made where it's like, okay, the tariff thing, the disruption was there, and that's going to spike up inflation. It didn't spike up inflation. It's all been marginal stuff, right? So all this, textbook says this should happen, right? Or, it seems to be reality seems to be far more, a lot of momentum is on a lot of different things versus, you know, once this change occurs, instantly these huge results happen. So I don't think that's the case. I think it's more important to get the general strength of the U.S. economy better than and to get all these trillion-dollar deals because also the trillion-dollar deals are coming in, right? $10
Right.
trillion worth of deals coming in. How
Right.
fast does that come in? All that kind of stuff, right? When if they solve the tariff deal, then you know they get the 5% more on the NATO weapons thing.
Right.
So
Right.
you know plus and minus, and then that's a huge plus more weapon sales for the United States. So
Yeah, yeah, exactly. Yeah, somebody mentioned that the other day. The benefit of the getting the Europeans to spend more on their own defense cuts about three different ways, and one of those is good news for Raytheon. So
right.
people should be investing in Raytheon right now. Okay, I'm going to use our last 10 minutes because I know you got to go. I want to use our last 10 minutes to spitball something with you.
Mhm.
And it really came out of the All In podcast the other day, where they were talking about whether Tesla had the best chance at superintelligence, or whether that was Google or whether that was NVIDIA. And we've been kicking it around with everybody this week. Maybe you and I even talked about it a little bit the other day. So getting to superintelligence is one thing, but out of that conversation, everybody seemed to agree that one of the reasons why Tesla is probably in the lead is because they have the whole stack. And this is not just Tesla, but it's Elon. So you got to count XAI and whatnot. And people are saying, man, they got to merge those two.
Right.
So but they have the entire stack. And so I was thinking about that entire stack because in my book, well, in the book that you and I participated in, we did talk an awful lot about the vertical integration of Tesla. And there's probably be hard to find a company that's more vertically integrated than Tesla, especially now. So let's play with this a little bit. Nobody else that's in the running for this has ever had anything remotely to mining and refining.
Mhm. Right.
I mean, it's kind of funny, right? I
Yeah.
mean, they're mining and refining raw materials for energy, which everybody now says energy equals
AI and data center. Yeah.
right,
Yeah.
right. So it's an equation.
Yeah.
If you need more data to be processed in your data center, then you need more energy. So they are mining and refining right now, and therefore they have a cadre of geniuses down there in Corpus Christi and elsewhere that are becoming extremely good at mining and refining, just like they do every single thing else that they do. Was it you told me or somebody told me the other day they're already breaking ground to double the size of that facility?
Of which one of the mine refining
Corpus
facilities?
Christi, Corpus Christi. Yeah.
Okay.
They're so confident apparently that they're going to double the facility.
Mhm.
Well, they've talked about mining nickel, there's all kinds of other possibilities that exist when you're already doing mining and refining. But
Yeah.
nobody else in the Magnificent Seven or any of the other, really, any of the other companies that are associated are doing any mining or refining. How important is that?
So one, having that vertical integration, having it straight down to the mining is in a chaotic world, where tariff barriers and other things could go up in a hurry. Like if the tariff barriers had stayed up between the US and China, then all the battery production, all the material production for batteries, Tesla need to have it localized. So then in that scenario, when we were worried, okay, they're not going to be able to deal with China, then if you didn't have that, then you would have cratered and been totally at the mercy of whatever happened, double tariffs, triple tariffs, whatever it is, right? So that under normal conditions, under right now, that is not that important. It matters. It's nice. It's good to have it. It's good to have visibility into it. It's, you're finally attuned to that thing. It helps you see the whole picture and the vital aspect of it, right? But with a particular tariff war with China not on the table, it's still happening, still directionally going that direction because Trump still wants this to be onshore and that kind of thing. So again, it's like it goes from ultra important to still important, right? So having this full vertical scale matters to that. But the even bigger point of it is everything that Elon does is about Mars. So
Yeah.
so Tesla, SpaceX, Mars is on Mars, you will need to produce your own
Fine and
materials.
refine. Yeah.
You need to refine, if you're going to do lithium, you're going to do nickel, you're going to do whatever, and you want to minimize the number of materials involved,
Hmm.
right? I don't want to have the full cornucopia of, I could have nickel, I could have iron, I could have sulfur, I could have whatever, the full like 10 different kinds of battery chemistries, right? I want to settle on the one that works for Mars,
Right.
right? Same thing for the rocket, same thing for the bot. Everything is about how do I make a full ecosystem of companies and industries, my stack. I need to move my stack and launch it with 1,000 rockets onto Mars every 2 years, right? So everything about Elon's planning is for that. It also happens to be the right thing for um, geopolitics, for localizing supply chains, there's other efficiencies there. But the main reason is it's got to go to Mars.
So now, as a result of my mining and refining, I add that to what I already have at Tesla in terms of material scientists and
Mhm.
material science engineers. The material science engineers that I have at SpaceX is another whole set of people between SpaceX and Tesla and the stuff that they're doing with mining and refining and cars and batteries probably have some of or a team of some of the best material science people in the world. And then you put Elon on top of that. So now all of a sudden I have this people, something that might go unobserved by the average stockholder, the average person that's trying to make a decision about a company, that this might be the best material science team anywhere.
Yeah, yeah, they have already done amazing things with the Starship rocket, with the Raptor engines, with the heat shield. Yeah, they have shown, and then they've, I think, contributed also to various innovations in the Tesla vehicles. I think Sandy Monroe has mentioned that they've done amazing things. They're not all of it because there are certain other battery innovations, other things, charging and stuff like that happening elsewhere. But they are a world-class team for sure.
Oh yeah, the stainless steel body on the Cybertruck was a big material science improvement. And then what was I trying to think of just a minute ago? A big one. Well, there's another big one. Oh, nuts! I can't think of it. I just had it and it went away. But there was another really big thing that they did in turn. Oh, I know the size of the the castings.
Right, right.
Nobody had ever done anything like that before, and that is they had to develop the aluminum
Yeah,
specifically to be able to make it fast enough to make that
Right.
casting work.
And make the inject in microseconds in order to make the parts perfect. Yes.
Exactly. All right. So yeah. So anyway, the next level of this in the 3 minutes we have left now would be energy.
Mhm.
And most people don't have a clue as to the amount of their knowledge and their team that they have with regard to energy. They will think about, oh, they're building their own battery. The battery is a completely new idea, new way to do it, a different size. They're trying to do it with a dry cathode and dry anode. I mean, there's all kinds of, again, material science and but also chemistry issues that they're working with on the batteries, which give them the opportunity to be a leader in the world in terms of battery science.
Mhm.
And that is in order to make them capable of making their own batteries or having others make batteries to their specs, which they then use to make into battery packs, which to your point could
Mhm.
be very, very helpful on Mars, but will be very, very helpful here in terms of building data centers and are
Yeah.
trying to get to super intelligence or even onto AGI. So you've got
Mhm.
2 minutes.
Yeah. So basically, that is still wrapping up. We should hopefully see a significant contribution this quarter and next quarter from the Shanghai factory, which, really start production beginning this year. And then there's a third factory hopefully comes online uh, in Texas, hopefully for 2027 or something like that, or maybe 2026. So hopefully those are going to scale quickly and start making a big difference. And I think Tesla could become, and if that could become their own best customer in that regard, if you need to make many gigawatts of power for these super data centers, then they could start sucking themselves. And also, they have to build out the semi-truck charging network. So if I'm going to start making 50,000 semi trucks a year and then hopefully scaling up way beyond that, you and I have talked about getting to 1 million by 2030, then um, you need to have replaced 20% of oil with 20% electricity generation and charging all over the United States and then the world. So those are huge things that have to develop that will need a lot of the energy that they're producing from the megapacks. And they also use the megapacks to handle voltage differences, other energy spikes and drops from the AI data centers, which are hugely challenging in that regard.
Right, right, right. All right. Well, maybe you and I can get together again later this week and do something that we can put on Saturday. Maybe we'll pull this entire idea together because I think when all is said and done, I don't think that the investing public gets the fact, even the big bulls,
Mhm.
even people that are listening to this channel all the time. I don't think people understand that the levels that the expertise is throughout the stack
Yeah.
and in ways that none of the other competitors have even they don't even have a department, much less a
Mhm.
team, much less any actual product being produced. So okay,
Right.
we'll pick up on that later. I know you've got to go and get
Mhm.
somebody at the train. So
Mhm.
thank you, Brian, as always, for jumping on. We're going to put it on pause for a minute and we'll come up with the numbers in just a few seconds. Before we get to the numbers, we have this from CNBC. Investors are gearing up for May's personal consumption's expenditures price index reading on Friday. Federal Reserve Jerome Powell said Tuesday that the preferred inflation measure is likely to rise to 2.3 from what it was at 2.1, and that the core is likely to go up to 2.6 compared to 2.5. And he stressed that the central bank is committed to keeping inflation under control. Nowhere in this apparent, I don't know, because I'm only reading with the CNBC reporting on it, but Powell doesn't apparently say that the expectations also are that the core is only going to go up 0.1% month over month, and that the headline is also going to projected to go up 0.1% month over month, and that this will be 4 months in a row that it's either been zero point 0.1 or zero point 0 or even negative for 4 months in a row. So the fact that the year over year is going to be up a little bit is really an anomaly and really has nothing to do with what he should be looking at. I'm sorry, it's just nuts. Anyway, just continues to give me heartburn that this Fed chair is so focused on the tariffs and not paying any attention to the rest of the numbers, which all of those other numbers should be telling him that he should be cutting. So let's go ahead. We got to take a look here at what is happening with the futures. We've got I'm going to do it a little different order just because it happened to fall this way. So in the first few seconds, well, no, let's go this way. Let's go ahead. The 10-year overall today ended up at just going away down another 0.2%. So we're still under 4.3. It had been back up over 4.3, about 4.34, came back down to under 4.3 again. That is a very good sign. I think we could see this continue to unwind. You've got oil up 18 cents at 65.10. This is excellent number. You got natural gas unchanged right now at $3.40. That is further down than it was when we reported this morning. You've got gold up $4.70. You might remember it was at 33333. Well, it's up from there. It's at 3347. You got silver sitting up another 0.25% at 3620. And copper up 0.35% and getting closer and closer to that $5. You have got Bitcoin up 2,000 today. It was up a little more than that when we reported this morning. It's now at 107,545. You have got the futures on all of the different, all basically flat. Dow's up, I'm sorry, down just a teeny tiny bit, 0.03. S&P down another tiny bit. Oh, but you know what? What is the deal here? Did I miss this? I got to go back and look. Sorry. S&P, this is bizarre. It's showing the S&P ending the day at 6,092. However, when we go to the CNBC report here on the futures, it's showing the S&P right now at 6,147, up 0.25. Now it's up 0.25. It's still at 6,147. So we are only a few number, just this close to all-time high, and potentially it may have been at the all-time high sometime today. And you got the NASDAQ up 0.03 at 22,468. Tesla, which is not having a particularly good day, is down 3.79 for the day, but is down another 0.17 for the evening so far at $327 a share. I'm sure you're aware that I think Tesla will be bursting out and running up and to the right very soon. It's got to start happening soon. There's got to be some point at which people go, okay, I better get on this. Maybe I'll just be completely wrong. It's happened. It happens. Yeah, ask any of my friends. Okay. Later on tonight, Brian White. So look forward to that. And I will put up last night again. I'm going to put that up. Yeah, I'm going to put it up until you watch it. Okay. No. See, I did. Earlier today, I put up the Nicholas Gibbs video. I did not put up my one from last night. I'm going to put that one up. I almost forget what it was about, but it must have been good. I wouldn't have put it up. Oh, it was Brian White. It was Brian White talking about Muskegon. And did you know that if you just change one letter in Muskegon, the G, and you change that to an L, it's Muskelon. Did you know that? Anyway, if you'd like to learn a little bit about what Brian White found out when he was in Muskegon over the weekend, I'll put that card right here. All right, that's all I got right now. It's been great talking to you.